Good morning, and thank you for taking the time to be here today. Fresh Squeeze is a quick reminder that you can do the things you need to do for your money and a few quick tips on how to get started. My name is Kelly Reddy-Heffner, and I'm a financial planner. And although there is no one size fits all solution to your finances, you can start somewhere to make progress towards what you want to accomplish. So today we're posing the question, what does stock market investing have to do with luck? In honor of St. Patrick's Day. Obviously, we've had a little bit of a whirlwind roller coaster over the past few weeks, and especially the last week or two. But to answer the initial question, today's conversation is going to be talking about how luck doesn't really have a whole lot at all to do with investing. Luck implies no work or effort put into a project, a process in order to have success. For an investing to be successful, it is a little bit of work. It is a thoughtful process to make the decision to assess your budget and see if there are resources available to invest. Once you make room in your budget, then it is work to be disciplined and to make recurring investments and to hold steady with your asset allocation and location. Asset allocation represents your comfort with risk, time frame for resource utilization, whether the investment is going to be for a long-term goal, financial independence, or retirement, the amount of stocks and bonds in your portfolio, that asset allocation represents those mile markers when you want to do something, how comfortable you are with the progress towards doing it. More stocks typically create more risk and also more opportunity for growth in a portfolio. The stock market moves up and down. You can lose money in the stock market, and that volatility can happen on a daily basis throughout the day, throughout the week, over a year. So ups and downs in the market are to be expected. The stock market, though, can also yield pretty reasonable returns. Looking at one portfolio example, a large custodian with an 80% stock, 20% bond target allocation fund, the average annual return for 1 year was 12%. So 1 year, February of 2024 to 2025. Over 3 years, the average return was 7%. Over 5 years, 10%, and at 10 years, almost 8%. So when we talk about average returns on the market, we often use that 8% for a more aggressive, like 80% stock, 20% bond portfolio. In comparison, if we look at savings rates, so using the 3-month T-bill, Treasury bill rate, in January of 2015, the rate was 0.05. In January of 2018, the rate was 1.94%. In January of 2020, it was 0.35%. And in 2024, the rate was 4.97%. So we hear a lot of talk about high yield savings, and those rates have been higher in the past couple years than they have been previously. So current cash rates in a high yield savings are still above 3%. A couple recent inquiries, maybe in the 3.7 range. Asset location refers to where you invest with a tax strategy in mind. Won't get too far into the weeds on that for the purposes of this conversation. But there's all kinds of other considerations with investing as well. Is your emergency fund fully funded? Is it in place? Is it liquid where you can access it without concern about losses or gains in the market if you needed that resource over the next year? The foundation for investing is to avoid a scenario where you sell low. So when the market drops, there's some concern, some fear, some panic, and you sell out at a low point. Again, comfort with investing is an important consideration. Typically, if you're investing and working with an advisor, planner, to put together a strategy, you're answering risk tolerance questions and discussing what your comfort level is. It is work. It is not luck to stay with your investment strategy, as it's reasonable to get uncomfortable from time to time. Investing is a long-term strategy and requires a consideration for those ups and downs. If we can't predict precisely those ups and downs, is luck still not a part of the conversation? And indeed, it really isn't. Today's Fresh Squeezed, it is a good time to revisit your portfolio. Check your asset allocation and location. It's not luck, it's due diligence, it's hard work. Revisit your risk tolerance, update your goals and time frame desired to accomplish those goals. Ensure your emergency fund is liquid and available. These steps are not unique to 2025. These are recommended steps every year. Reach out to a professional like myself if you need assistance to review those steps. So I hope you have lots of luck in other ways today. But again, if this premise is true about investing, it might not be luck about accomplishing the other things as well. So best wishes on putting in the hard work and doing the things you need to do to get where you want to go. Thanks and have a great day.